Hey everyone, welcome back to Corporate Decoded, the place where we untangle the wild world of business filings. And if you thought Johnson Controls was just about thermostats, get ready for a surprise as we dive into a really interesting sale they've made. Before we dive in, make sure you hit that subscribe button and join our Discord community linked in the description below for more exclusive insights. Today we're looking at Johnson Controls and a big move they've made selling off a chunk of their business. This is reported on July 31st, 2025, and it's all about a significant sale that changes the landscape for them. Johnson Controls, a company you might know for its building climate control systems, has been busy. They've officially completed the sale of their residential and light commercial HVAC business. Think of all those air conditioners and heating systems for homes and smaller buildings. That part of the company is now in new hands. This isn't just a small side business they offloaded. This is a strategic decision to reshape their focus. They are streamlining their operations to concentrate on their core strengths in building technology and software. It's a classic move to become more specialized and hopefully more profitable by shedding less central activities. Now, while the sale itself is the main event, tucked away in these filings are glimpses into their financial structure. You see a lot of different types of notes, which are basically ways the company borrows money. We have notes due in 2026, 2027, 2028, and all the way up to 2064. This variety shows they use different borrowing strategies to fund their operations and growth. What stands out here is the maturity dates for their debt. Having debt that needs to be paid back over several decades suggests a long-term view of their business. But it also means they have a lot of financial commitments stretching far into the future. For instance, they have debentures with a 6.950% interest rate due in December of 2045. That's almost a 7% cost for that specific debt, which is quite high, especially in today's market. It suggests they might have borrowed this money when interest rates were higher, or it's for a riskier part of their business. The key takeaway from the financial details is how they are structured. They have their ordinary shares, which represent ownership in the company trading on the New York Stock Exchange under the ticker JCI. This is what most investors are familiar with. Then you have all those different notes, for example, 390% notes due 2026, trading as JCI 26, trading as JCI 26, as for our investors. This listing shows us that the company is actively managing its debt portfolio and regularly interacts with public markets for funding. It's also interesting to see they have sustainability-linked notes. This means the interest rate or other terms of the loan might change based on whether the company meets certain environmental or social goals. It's a growing trend showing how companies are aligning their financial strategies with sustainability targets. And when you look at the very long-term debt like the 4.95% notes due 2064, it highlights the long investment cycles in their industry. They are clearly planning for the very distant future. The filing also mentions a Regulation FD disclosure. This is basically a rule that says companies have to share important information with everyone at the same time. They are referring to a press release issued on August 1st, 2025, which likely gave more details about this business sale. This shows good practice in making sure all investors get the same information promptly. And here's the core of the story. On July 31st, 2025, they completed the sale of their residential and light commercial HVAC business. This was done through an agreement with Robert Bosch GmbH, a big name in technology and services. The deal was agreed upon back in July of the previous year, 2024. So this is the final step. One of the attached exhibits is a press release. While we don't have the content of the press release directly in this view, it's mentioned as the document detailing the transaction. And finally, we see the signature. This is essentially the official stamp of approval from the company's management confirming the information in the report. Richard J. Dancy, Vice President and Corporate Secretary, signed off on it. So what does this all mean for Johnson Controls? Well, selling off their residential and light commercial HVAC business is a significant strategic pivot. They are clearly aiming to focus more on their commercial building solutions, where I suspect the profit margins are higher and the growth prospects are more aligned with their vision for smart, sustainable buildings. It's a move that signals a commitment to specialization. The variety of debt maturities and interest rates shows a company that is actively managing its finances and has a long-term outlook. However, those higher interest rates on some of their older debt are something to watch. If interest rates were to rise further, it could put more pressure on their earnings, especially on the debt that can't be easily refinanced at lower rates. The inclusion of sustainability-linked notes is a strong signal that Johnson Controls is not only aware of environmental, social, and governance, or ESG trends, but is actively integrating them into its financial strategy. This can be attractive to investors who prioritize these factors, but it also means the company needs to deliver on its sustainability promises to avoid potential penalties or reduced financing terms. The sale itself is likely to free up capital and reduce the complexity of their operations. This sort of divestiture usually aims to make the remaining core business more agile and profitable. The big question will be how effectively they can reinvest the proceeds and leverage their sharpened focus on commercial and industrial building technology and software. Are they moving into a more lucrative market or shedding a business that was still a solid contributor? Time and future financial reports will tell. Overall, Johnson Controls appears to be making a calculated move to streamline its business and concentrate on areas with potentially higher growth and profitability, particularly in the smart building technology space. The risks lie in successful execution of this strategy and managing existing debt obligations, especially in a potentially volatile interest rate environment. The opportunities are clear if they can capitalize on the growing demand for energy efficient and smart building solutions. What's your take on Johnson Controls shedding its HVAC business? Do you think this is a smart move for their future? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord to keep the conversation going. Thanks for watching. See you next time.